Hey there, it's Kris Ontiveros with Investors Edge Real Estate Group. We help people build wealth and retire with real estate every single day. I'm here today because I want to tell you the 5 reasons why real estate is a superior investment to the stock market. Number 1 is leverage. When you buy real estate, you can leverage 5 to 1 as an investor. So let's just take $20,000 for example. If you had $20,000 and you wanted to buy Apple stock, you could buy $20,000 worth of Apple stock. There's nothing you can do, as far as leveraging. So if you want to buy, if you have the same $20,000 and you want to invest in real estate, you can actually buy a $100,000 property. So 5 to 1 on the leverage, which is one of the first thing that makes real estate a superior investment. Number 2, real estate's negotiable. So let's just take that same $20,000 and you want to go buy some of that same Apple stock. So can you go negotiate a price 10%, 20%, 30% below? No, you can't. You have to pay what it's worth. So with real estate, everything's negotiable. The property might be in perfect condition, but because of one reason or another, they may be willing to take a discount. Other reasons people take discounts is because of condition. A lot of times properties are in really bad shape, so you can get a big discount. Generally, for every $1 worth of repairs that is needed, we can get $3 off the price. So that takes us to number 3 reason why real estate is a superior investment to the stock market, is that it's improvable. Like I said, so we get $3 off the price for every $1. So in return, for every $1 that we put into a property, it's generally worth $2 or $3 more. So if we put $20,000 into a property that needs a lot of work, we've increased the price by $60,000 or more. You can't do that with the stocks. When you buy a stock, it's a piece of paper. There's a business behind it, but there's nothing you can do to improve that business. You have to hope, wait, and pray. Cash flow. Number 4, my favorite reason is cash flow. So the first thing we're doing is we're leveraging, right? So instead of $20,000, we have a $100,000 investment, and we're going to have appreciation on that. But that's not what we count on. We get cash flow from day one. You can get cash flow. People need a place to live. You provide a place for them to live, and they will pay you for that. Let them live there long enough, they'll pay off your mortgage. That's one of the things that we teach. Let a tenant pay off your mortgage, and free and clear real estate is a fantastic way to retire. Number 5. Tax benefits. Real estate has amazing tax benefits. It's the 3 Ds. Depreciation is the first one. So for some reason, well, not for some reason, the government wants you to invest in real estate. They've made a lot of great rules as far as taxes that makes it beneficial for you to invest in real estate. Depreciation is number 1. So they're saying at the end of 27 and a half years, this building is going to be worth nothing. When in reality, it's going to be worth a lot more in 27. It'll probably be worth 3 times what it's worth in 27 and a half years. But they let you depreciate. So each year you get to write down that little amount as a loss, which goes into our second D, deductions. Any expenses that is related to this business for a real estate property, that is deductible. So your depreciation is going to be there, but any utilities, any repairs that you have to make, and then to run a business, real estate business, you need to have things like a cell phone, you need to have internet, you need to be able to buy computers. So all of that stuff would also be checked, talk with your tax consultant, but those are deductible items. And lastly, which is one of the things that makes real estate absolutely amazing, is defer. So you buy $20,000 worth of stock. It goes up to $100,000 over the years, right? So now you want to sell. You don't have a good feeling about that. You want to sell that, and you want to move it into another investment. Well, with a stock, you're going to have to sell it. You're going to have to pay the taxes on that. In real estate, that's not how it works. They have what's called a 1031 exchange. So you sell it, you have your appreciation, you sell it, and then you can exchange it into a bigger property, a better cash flowing property. So for example, you buy a house, it goes up in value, you exchange it for a 4-plex, you exchange the 4-plex for a 16-plex, so on and so forth. So you can exchange into bigger and better investments. But the thing is, you don't have to pay the taxes on it at the time. The only time you ever pay the taxes is if you cash out in the end. So again, my name's Kris Ontiveros. I help people retire with real estate every single day. It's my passion. I have a goal to make 1,000 millionaires, so if you want to become one of those, please contact me. My contact number is 602-292-5747. Again, I work with a Investors Edge Real Estate Group with U.S. Preferred Realty in Mesa, Arizona. We have lots of great deals and a lot of great education, so follow me on Facebook at Investors Edge Real Estate Group, or on Instagram and Twitter at AZ Home Renovator. Thanks a lot.